Hello and happy January. Mike Reilly here with you again to give some financial literacy tips. And since it's January, a lot of questions I'm getting from clients is about how to do more with their registered retirement savings plan or RRSP. That they've been around for a long time and people generally make regular contributions, but at this time of year, between the beginning of January and the end of February, you can make additional contributions to count against last year's taxes. So one of the strategies that I hear people ask about is what's called the gross up strategy, which is simply adding enough more to your RRSP so that it equals the refund. What that means is that you can top up your contribution in the exact amount that you would expect to get back to pay back either a loan that you borrowed to have that money or existing savings. So it's really simple. I've kept the math as easy as possible. Everybody is different, so I would urge you to work with an accountant or do your taxes or have an idea of your taxes within the next couple of weeks so that you know exactly how much to do with this because whatever your deductions at work, etc. And you have to have room in your RRSP contribution for this to work as well. But it's very simple. So I'm going to use some basic math and a tax bracket that I think people can relate to. So if we think about someone in a 30% tax bracket, that's a fairly common amount of income for someone to earn. And they put $3,000 into their RRSP contribution. So $3,000, which is really just $250 a week, or sorry, a month, or $125 bi-weekly or semi-monthly. So it's not that big a deal for a lot of people. Many of my clients are working towards doing $250 on a monthly basis. So someone in a 30% tax bracket putting in $3,000, their refund back from the government will be $900 refund. Now, I often will urge people to take that refund and invest it back into their RRSP, which would give them $3,900. But some people like to pay down debt or spend. That's not really the topic of this, but so $900 refund. Now, if that same individual was to add another $1,285 in their contribution, that $1,285 contribution would result in a $385 refund. So they would have a total contribution of $4,285 into their RRSP. Are you with me so far? Okay, good. But take a look what happens here. If we sum the $900 refund from the existing contribution and the $385 refund from the new contribution, it equals $1,285. Well, that's the same amount that we topped up our existing RRSP in the first place. So if you were to do this, say you took a loan out or used a line of credit to accomplish this strategy, you could just pay that back and you have $4,285 in your RRSP, and you wouldn't have really been down for more than a couple of months that it takes between the time that you file your taxes and when the refund comes back. Or if you had that amount in savings, so in a tax-free savings account now, or in a bank account, you could then put that money back in, and you'd be exactly where you were in the first place, but your RRSP is larger. Imagine if you did this every year, how much larger your RRSP would be through compounding. I hope that makes sense. I hope I've done it in a simple way. And as I said at the beginning, everybody's situation is different. If you'd like me to sit down with you and tell you what kind of numbers we could be looking at, because obviously this is just a hypothetical situation, so that we get as close to the right number for you as possible. I'm happy to do that. You can contact me through, if you're seeing this on Facebook or on YouTube or on LinkedIn, my connections are there. Hopefully you make the most out of your savings this year and make it a fantastic financial year.